Hello everyone, welcome back to the channel. In this video we will be doing the chapter 6 inventory. This is the part 2 of this chapter. If you haven't done the part 1, I'll link it in the description box below. I'm also going to link all the playlists in the description box below, so make sure that you seen all the videos. Okay, so in the previous video we had done half of the chapter. Now let's come to the numerical part of the lesson. So we had done till the methods of calculating. Yeah, so we have to start from here. Okay, so let's start with it. So now we are going to see the methods of calculating the cost of inventory. So let's discuss them. How do you calculate the cost of inventory? Cost of inventory. What are the different ways in which we get to calculate the cost of inventory? Think about that. So in this chapter there are 3 methods using which you can find the methods. These are the methods which are used to calculate the cost of inventory. The first one is the unit method. Now unit method is something you've been doing since childhood. Unit method is just unitary method. The second one is the FIFO method. Now what does FIFO stands for? FIFO stands for first in first out method. So this is first in first out. So what does that mean? What does first in first out actually mean? Just try to read the name again. First in first out. What does that actually mean? What comes in first also goes out first. Let's take an example. If I have a business of selling, let's say, bottles. I have a business of selling bottles. Now, this is my operating activity. So this is what my business does. Now, let us assume that on January 1st, I purchased the stock, I purchased inventory of bottles. I purchased 10 bottles. So this is my stock. This is what I will be using for reselling because my business deals in with bottles. On Jan 8th, I purchased 10 more bottles. Okay, understood. Now let's say I got a customer on 6th Jan. I got a customer on 16th January and her name is, let's say, Ria. So Ria came to me and she said that she wants to buy 5 bottles. She wants to buy 5. Okay, let's say for simplicity she wants to buy 10 bottles. Now tell me, how much inventory do I have? On Jan 1st I bought 10, on Jan 8th I bought 10. So I have 20 bottles with me and Ria wants to buy 10. Now, which 10 bottles will I give her? Let's assume that all the bottles are identical. Will I give her the bottles which I purchased on Jan 8th or will I give her the bottles that I purchased on Jan 1st? Here, there is one thing you need to keep in mind, that whatever stock I buy first, that stock I would prefer to sell out also first. Right? I would always want to sell away as a business person. If you think about it logically, I would always want to sell away the older stock first. I would want to sell away and clear off my old stock. If you think about the shops like Claire's and everyone, they keep something called as a clearance sale, right? So what is clearance sale? Selling of the older stock. So everyone wants to sell their old stock first and then they want to sell the latest stock, right? So you just have to keep that in your mind. So that is what first in and first out method says, that whatever comes in first also goes out first. Now tell me, now that you've understood what first in first out is, now tell me on 16 Jan, which 10 bottles will I give to Ria? Obviously, I will give Ria whatever I bought on Jan 1st, right? Now tell me, if I give Ria 10 of the bottles, then how much bottles are gonna be left in my inventory? So, first I had 10 plus 10, I had 20. But because I'm giving Ria this 10, so this 10 will be over. So I'm left with just 10. Easy. I hope you have no doubt in this. If you have any doubt, we are going to be solving questions and we will be discussing this even further. And you can re-watch the video. Okay. So let's take another example for the same FIFO method. Let's say on 1st Feb I got 18 bottles. These are my purchases, my stock. On 8th Feb also I have two bottles, let's say. Okay, and on 17th March I bought 16 bottles. Now I have a customer with me on 19th March. On 19th March, I have a customer. Let's take Ria again. Ria wants to buy 21 bottles. She wants to buy 21 bottles. So what will I do here? Again, going to the first in, first out. What comes first, that goes away first. So since she needs 21 bottles, I go to my first purchase ever, which is 1st Feb, and 18 are there. Even though she wants 20, only 18 are with me. So I subtract the entire 18 and my inventory of 1st Feb becomes 0. Now, out of 21, 18 I have given. How many more are left? 3 are left. So I'll go to the next inventory, which is the 8th Feb, and give her these two. So then this also becomes 0. Now I have given her 19 out of 21. I have to still give her how much? I have to give her one more, right? So on 17th March, I will minus 1. So when you subtract 1, you will be getting 50. So how much closing inventory is left? How many bottles are left in my inventory? 15 are left. This got empty, this got empty. Here I had to give her 1. So this much is left. So that is what FIFO method is. I hope you understood, and make sure that you write it. So first in, first out. If you're not going to make notes of whatever I'm teaching, then there's absolutely no point of watching this video, because these are some things which you need to make notes, otherwise you will forget them. So whatever comes in first, goes out first. Okay, so that is our FIFO method. I hope it's easy and you know how to calculate the closing stock. What is closing stock? Whatever is left after giving away everything that was demanded from us. Now, so I did not discuss unit method. Why? Because this is the same as unitary method. Finding the value of 1 unit, and when you find the value of 1 unit, you multiply it with the required number of units. Now let's see the third one. What is our third method of calculating inventory? The third method is known as AVCO. What is AVCO? It is average cost method. So AVCO is nothing but average cost method. So using average cost method, I can find the inventory number, the cost of the inventory. So now there are two ways in which you can find the average cost method. The two types of average cost method. The first one is always periodic and the second one is continuous. The first one is periodic and the second one is continuous. So these are the two methods using which you can calculate the average cost. Using the AVCO, you can calculate the cost of inventory. Now let's quickly revise the three types of methods we have to calculate the cost of inventory. Unit method, which is the unitary method. FIFO, which is first in, first out, which means whatever comes in first also goes out first. And then we have the average costing method, which is AVCO. There are two types of average costing method. The first one is the periodic costing method and the second one is the continuous method. We will be discussing periodic and continuous in detail in a while, but just don't worry. This is the most complex part of the chapter. That is what people say. But if you actually think about it, if you compare it with the other things, then it might be difficult. But if you actually think about it, this is literally the easiest thing ever. Okay. Okay, now let's first go and do the theory here. So what is mentioned in unit cost? This is the actual cost of purchasing identifiable units of inventory. So whatever the units is there, and if you have the value of 1, you just multiply it. Only use when items of inventory are individually distinguishable and of high value. Now let's come to FIFO. For costing purposes, the first items of the inventory received are assumed to be the first ones sold. right? The cost of the closing inventory is the cost of the most recent purchases of inventory. Okay. AVCO method. So this is the average costing method. In this method, we take the average of the cost. The cost of an item is calculated by taking the average of all inventory held. The average cost can be calculated periodically or continually. This we are going to discuss. So this is also again the theory of this, which we will be discussing in a bit. Okay, now let's come to Invicta. Okay, I know there's a lot of mess in this PDF. Let me just clear it. Invicta has a, okay, for now we're not doing the 2 and 3. We are just, oops, give me a second. Okay, for now we're not doing the 2 and 3 part. We are just doing the first part. Let's read the question. Invicta has a closing inventory of 5 units at a cost of $3.5 per unit at 31st December 2005. During the first week of January 2006, Invicta entered into the following transactions. Purchases. So these are the purchases she has. Okay. Invicta sold 7 units for 10 per unit on 5th January. Calculate the closing inventory at the end of the first week. Okay. So what are you supposed to do whenever you have a question like this? The first thing you need to do is underlining whatever is required. So let's first do that. So she has a closing inventory of 5 units at a cost of this. Whenever you have a closing inventory, keep in your mind that even that stock is included. You have the purchases, but you also have the closing inventory with you of the, what does that mean? This is the stock from the previous year. So when you talk about FIFO, first in, first out, will you subtract from the purchases or will you first want to like give away or sell off the previous year's stock which is left with us? So whenever you have a closing inventory, that means it is the stock which is left over from the previous year. So you would want to sell that away. So let's write the closing stock also over here, which is 5 units at a cost of $3.50. Okay, so this is how our purchases will look. Invicta sold 7 units for 10 per unit on 5th January. On 5th January, Invicta sold. Okay, so now let's see what she actually did. Let's see. So Invicta sold 7 units. So let's go to the oldest purchase or the oldest using FIFO method. Let us see what stock was with us for the longest period of time. So we go to the closing. She wants to sell 7 units, but we have only 5 here. So we subtract the 5. So how much closing stock is left here? 0 is left here. Why? Because we have sold the 5 of them. So 5 are sold. How many more we need to sell? You need to sell 7 goods. You have already sold 5, which means you need to sell 2 more. So let's go to the next, which is the oldest, using the FIFO method. So we come here and we need to sell 2 from here. So what is 5 minus 2? How much closing stock is left? If I had 5 units and if I am giving away 2 of them, how many will be left? 5 minus 2, which is 3 units. So I am left with 3 units. Now, if I give her, so how much ever I had to sell, that is over. So now tell me, what is the closing stock? So I will be adding 3 plus 5 plus 5. That is my closing inventory, right? Now, if this is the unit method, if this is the units and this is the price, the total value of the inventory would be price multiplied by quantity. There's nothing new in that. So now let's try to find out. So here we have 0. Let's go to the 2nd January. We have 3 multiplied by 4.00. And on 4th January, we have 5 multiplied by 5.00. On 6th January, we have 5 multiplied by 5.50. Let us add it all. Let us multiply it all. I hope you're doing it by yourself as well. Otherwise, there's no point. I've mentioned it many times. So okay, so what is our closing stock? Our closing stock is the sum of 12 plus 25 plus 27.5, which is 64.5. 64.5. Now, tell me, is that the answer? Let's go and check. Okay, they have given the theory and it is $64.5. I hope you understood how I got it. So the closing inventory, which means the leftover stock from the previous year, I would want that to go away first. So we had just done it using the FIFO method. Whatever stock comes in first also goes out first. Easy? I hope you have no doubts in that. Okay, now let me tell you guys how do you use the average costing method. We'll be doing this average costing method. Okay, so as we have already studied that there are two types of average costing method. The first one is the periodic and the second one is the continuous. So first, let us do the periodic method. So how do you do the periodic average costing method? So there is this one formula, you need to write it down. So whatever the cost per unit, the cost per unit will always be equal to the total amount of purchase. Total amount of purchase divided by total number of units. Okay, so what is this formula? The formula of cost per unit, cost of one unit will be equal to the total amount of purchases divided by total number of unit. So this will be given in the question, this will also be given in the question. You just have to divide the both of them to get the cost of one unit. So using this you will be finding the periodic method. No doubt this is the only formula and we will be doing that now. Okay, so let's go back to our Invicta question only. Where is it? Invicta. Yeah. Okay. I'm erasing this now, the FIFO method, because I will be explaining the periodic method. So again, we have Invicta having the closing inventory of 5 units at a cost of 3.50 per unit at 31st December 2005. During the first week of January, Invicta entered into the following transactions. Okay, again we have the closing with us. Now we need to find out the closing inventory, but this time we should not use FIFO. We have to use the periodic weighted average cost method. Now, if you can recall the formula, we need the total amount of purchases. Now, what will be the total amount of purchases? Think about it. Okay, so you know what the periodic, I hope you came with the answer. So you need to find the total amount of purchases divided by the, what do you have to divide it by? The number of units. Now, I have already explained in the previous one that you have to always include the closing inventory also. So that will also be included in the purchases. That is why we have written it here. Clear about that? Now tell me, what is the total amount of purchases? Total amount of purchases will always firstly be quantity multiplied by price, quantity multiplied by price, quantity into price, quantity into price. So you have to first do that. Let's do that. 5 multiplied by 3.50. 17.5. 5 multiplied by 4.0, 20, 25. 5 multiplied by 5.50, 27.5. Okay, so these are our total purchases. So that would be, I hope you're solving it with me. So what we really have here is 19, right? We have 19 with us. If you add all of these, you will be getting 19. So the total amount of purchases is 19. Sorry, 90, not 19, 90. Now, let us go to the total number of units. We are talking about only units. So that would be 5 plus 5 plus 5 plus 5, right? So that would be 5, 10, 15, 20. So we have 20. So what is 90 divided by 20? Okay, so it is 4.5. Do you have any doubt in how I calculated the cost per unit? So this is our formula: total amount of purchases and total amount of units. In the question you have been given quantity, you have also been given the price. So multiplying the quantity and the price will give you the purchase, then you added everything and you had the total number of units, so you divided by that. After doing that, you got the cost per unit. In our case, we got the cost per unit as $4.5. 4.50. This is what we got. Right, now after this, what are we supposed to do? We need to find the closing inventory. So now if you have the cost per unit with you and you want to find the closing inventory, how will you find out? Tell me. Think about it. Take a moment and apply some common sense and think about it. Yeah, so our total number of units were what? 20. 20 were the total number of units. If you have sold 7, then how much closing inventory is actually left? 20 total number of units minus 7. So how much are we left? We are left with just 13 units. We are left with 13 number of units. Now you want to find the cost of inventory left. So you multiply it with cost per unit, and you know that the cost per unit is 4.50. The 13 multiplied by $4.50 will give you $58.50. Did you understand what I did? Now let's go and see if that's the answer. Average cost per unit. This is what we did. Closing inventory cost. Yeah, 58.50. We got that. Cost of sales would be 7 into. Okay, what is the cost of sales? You have the number of units which are sold and you have the cost of 1 unit. So the total cost would be quantity multiplied by price. This is what we have discussed in a more easier format. Again, I'm repeating, if you're not going to write this, then you will not be able to understand anything I'm saying. So we are done with the FIFO method and we are also done with the periodic average cost weighted method. So in FIFO method, whatever came in first, that goes out first, and also what is the closing inventory left would be whatever has been sold, and you multiply price multiplied by quantity will give you the total value. And how do you do the periodic weighted average cost method? To do the periodic weighted average cost method, you have one formula, which is finding out the cost per unit. If you know the cost per unit, then it is very easy to find the cost of the closing inventory. So what do you do in such a situation? The total number of purchases divided by the total number of units would give me the value of the cost per unit. And then I know how many goods have been given away or sold, so how much other units are left with me. Those number of units will be multiplied by the cost per unit. By doing this, I will be getting the value of the closing inventory. Okay, so that's it. We are also done with the periodic weighted average cost. Now, the last topic or the last method which is left is continuous weighted average cost. I know it might be a little bit confusing right now, but if you practice it enough and if you keep writing whatever I'm explaining, you will not face any problem. Okay, now we have the continuous method. So what is the continuous method? Let's talk about that. Firstly, you need to make 3 tables whenever we are talking about the continuous method. So what are the 3 tables? The first table is a purchase table, the second table is the sales table, and the third table is the balance table. Okay, how will that look like? So for purchase you will have 3 columns, for sales you will have 3 columns, for balance you will have 3 columns again. Okay, so you have date, you have unit, amount, and total. Okay, so whenever you are doing the continuous method, you need to keep in mind that you have to make 3 tables. The first one is the purchase, which has unit, amount, and total column. Second one is the sales, which has unit, amount, and total column. And balance again has unit, amount, and total column. Okay, so now how are we going to solve this part? How will we use this table to solve whatever is there with us? Whenever I purchase something, I will write it over here, the number of units I have purchased and how much ever is the costing of one, whatever is the total. So whenever I purchase something, the stock increases, my balance increases, my inventory increases, my purchases increases. So I will have a plus of something. So whatever I have purchased, I will be writing it over here, and the value of it and the total also. So total is nothing but unit multiplied by amount. Now again, if I purchase something else the next day, again I will add it to my balancing over here, and after adding it to my balancing, I will come to a totaling over here, which would be a sum. Okay, now whenever I purchase something, my balance increases. Whenever I purchase something, my balance increases. Whenever I purchase something, my inventory increases, which means my balance increases. Okay, whenever I sell something, what happens? Whenever I make a sales, whenever I sell something, my balance reduces, my inventory reduces, because I am giving away my purchases, I am giving away my stock, I am giving away my goods, which means my balance is actually reducing. So whenever I make a sales, my balance is reducing. So this is the number of sales, this is the amount, this is the total, and you will minus the sales, you will minus whatever is here, and you will minus and then write the totaling over here. So whenever something is purchased, the balance increases. Whenever something is sales, the balance decreases. Okay, any doubt so far? So by doing this, this is how you have maintained a balance, and you have plus minus, and whatever you purchase, it comes in, whatever you send out, it goes out, and by the end of the year, how much balance you have left, that would be your closing inventory. So this is very easy. When we do the question, you will understand it better. But whenever we talk about a continuous method, you make 3 tables. You make a purchase table, you make a sales table, and you make a balance table. And all the 3 tables have three columns: the unit column, amount column, and total column. And you multiply them and you write, whenever you purchase something, your balance increases. Whenever sales takes place, your balance decreases. And by the end, how much ever balance you have left, that would be the total number of that would be the closing inventory of your organization. Let's quickly revise the 3 methods. What are the 3 ways of finding of the cost of inventory? The first one is the unit method, the second one is the FIFO method, and the third one is the AVCO method, which is the average cost method. So the unit method is a unitary method, and FIFO means first and firster, and AVCO has two types. The first one is the AVCO stands for average cost method. The first one is the periodic method and the second one is the continuous method. And what do you understand by periodic method? Whenever we use periodic method, the formula of cost per unit would be the total amount of purchases divided by the total number of units. And whenever you do the continuous method, you make three tables. The first one is purchases, the second one is sales, and the third one is balance. And whenever you purchase something, your balance increases. Whenever you sell something, your balance decreases. This is the three methods we have discussed so far. So now we are just left with solving questions using the continuous method that we will be doing right now. Okay, after doing that, what is left with us? Preparing the statement of P&L, and okay, that's easy. We need to prepare a statement of P&L. Honestly, your question is an objective questions paper, so you won't be given to make the accounts, but then there might be a fill in the blanks, so we will be doing that. It's also easy again, there's nothing to worry. And after doing that, we are left with a few more questions. We will practice all these questions, okay? And after that, a little bit of theory is left. I would want to actually complete the chapter because we are only left with just the theory part. We are only left with the theory in the chapter and solving 2-3 questions and the test understanding and the examples and the stuff which I have left in the starting. So we have already done all the important things in the chapter. I had to actually complete this chapter in 2 parts, but then I don't want to give you guys the burden because you might not be able to understand more than this in this video. So I'm ending this video over here. I will have another part for the chapter 6 inventory, and that would be the last part of this chapter, and that would be a very short 15-minute video, 15 to 20 minutes video, because we don't have much left. Okay, so make sure that you've watched all the videos and make sure that you have checked out all the playlists. If you haven't checked them out, I've linked them in the description box below. Also, make sure that you guys are writing whatever I'm teaching and you guys are actually maintaining the notes, because if you're not doing that, then you won't be able to study, because this is accounts, so you can't really do accountancy without writing them down. Thank you.